This is a pre-market analysis of 31st of July. It's going to be a positive day. So we are going to get a gap up opening of around 100 points. So a lot of positives are there. The US-Iran conflict is now losing its significance, but there are a lot of other things to discuss. There is some RBI's new rule on bulk deposit interest rate pricing that is going to be very good for the private sector bank, especially for HDFC. And you can see already HDFC Bank ADR is almost close to 1% high. And if you look at it, there is a softer inflation data also in US, and that may probably lead the Fed to at least maintain the interest rate in the next meeting also. And the Microsoft earning is very good, and there is a sharp rise in US markets. I'll be discussing that. And the Brent crude have actually fallen below 90 after there is a proposed maritime coalition. I'll briefly discuss about that also. So as of now, GIFT Nifty, if you look at it, it's indicating a gap up of 100 points and it's opening around 24,400. So there is a higher probability that it can again go and touch that 24,500. So the resistance is going to be 24,500 and the immediate support is around 24,300. Now, most importantly, yesterday also FIIS bought for around 3,600 crore. So day before they bought for 3,000 crore, previous day they bought for 750 crore. Yesterday also they bought. So 3 days consecutively, continuously they are buying, means that's actually a very good positive signal. IT ADR is slightly weak. That is the only concern today. Otherwise, banking ADR is strong. We are getting a gap up. Banks are looking good. So everything is looking good. So let's start with this deposit rule. I'm not getting into the depth of it, not going academically. I'll just tell you what you need to know about this. So see, the RBI have formally allowed the banks to offer a different interest rate on bulk deposits, which is based on liquidity, risk which is associated with each deposits, right? So based on the risk, you can now give different interest rates. So until now, there was some kind of uncertainty about whether banks could offer a different rate, to two large depositors when the deposit amounts were similar and the tenure was similar. So how can you give a different differential rate of interest? Now RBI have clarified that different rates are permissible when there is a genuine difference in liquidity risk. So based on liquidity risk, you can do that. Okay, now I'm not getting into the understanding part and all that is actually more of academic in nature. Let me tell you why this is going to be positive for the bank. See, in fact, if you look at it, the major concern for Indian banks, if you see the recent quarter, has been the intense competition for the deposits. So banks in fact were forced to offer higher interest rate to attract the corporate deposits, and that's the major chunk of deposit and institutional deposits and the large value deposit. So when you're increasing the interest rate, what happens is the cost of funds will increase, and that will reduce your profitability also. And then there is a pressure on net interest margin, and there is a asset liability management challenges also will be there. But when it comes to this new framework, banks in fact it is actually helping the bank to improve the deposit pricing discipline and liquidity management and risk adjusted funding decision also, and then proper asset liability management and net interest margin is also getting protected. Now if you look at it, this may be particularly useful for large private sector banks which is handling substantial corporate and institutional deposits like HDFC and ICICI, Axis Bank, Kotak Mahindra Bank, etc. And most importantly, HDFC is going to get a lot of benefit also. Okay, so that is why you look at HDFC ADR, it's already 0.5% up, and ICICI is already 1.6% up. So if you see very good positive arbitrage, so banks are supposed to do good for today. Maybe IT side, there will be weakness. In fact, ADR is showing weakness. Now, apart from US inflation data, if you see, that is again positive. I'm not just getting into the number. You just need to know inflation is less. So this is actually positive for the market. There is no point in discussing the number now. Again, coming to Microsoft earning also, this is a very good result. And based on that, Microsoft share prices increased almost 15%. And that's actually highest one-day percentage gain in almost last 18 years. So that results were good, earnings were good, and future AI related capital expenditure guidance was less aggressive than what is actually afraid of. So all these have turned the stock actually increased around 15%. And now if you see, Nasdaq is around 2.5% up yesterday, S&P 1.4% up, and Dow Jones is 1.2% up. VIX have fallen to 17, which was 21 yesterday. So overall, the global equity market momentum, if you see, improved significantly, and that impact will definitely be seen here also. And 24,400 is where we are opening. There will be a move. There has to be. There is a move. And also, if we need to get a breakout of 24,500, that has to be today. I'm not just talking about it is going to touch and reverse. if at all we need to get a gap up, it has to be today, except that US Iran escalation. But even then, there are positives. Meta earnings, it was not that good comparatively, it was weak and it has declined around 9%. US bond yields is also extremely high and, in fact, highest since 2007. So if you consider all these, that is what I'm telling you. GIFT Nifty is also indicating 100-point gap up. So any dip is a buying opportunity. You may not get a buying opportunity also. There may be straight away the up move. You may get IT ADR is the only weakness. Infosys is 5% down, but you have seen consistently it was going up 5%, 6%, 3%, 4% like that. Wipros also fell around 1.2%, and that could be profit booking or this arbitrage correction, right? Because we have seen last 4 or 5 days continuous rally. So there is a normal profit booking. Now coming to US-Iran conflict, I think we are giving less importance for this now. The US carried out another larger military strike against Iran's target after Iran fired missiles towards US forces in the Middle East. Yesterday we have discussed about this. So the point is military escalation is continuing, the conflict remains unresolved, and the crude oil price remains sensitive to these developments. Just keep a watch on the crude oil price. But despite all these, yesterday we have seen the Brent was going to around 93, right? But after that, price of decline came around 90 after Saudi announced that there is a plan for multinational maritime defensive collaboration coalition, something like that. So there is some positive which is going on there. Let's not getting into the details actually, but the objective is basically to protect the freedom of navigation and protect commercial shipping routes and to improve the maritime security. So after that, the Brent crude actually came down to around 87, below 90, which is very good positive. So the market impact, let me tell you, Brent falling below 90 is actually considered positive. So if you look at, a lot of positives are there for today. That is why I'm telling you, if at all we need to get a good move, if we need a breakout of that recent swing high, which is 24,525 something. So if we need to get that break 24,525 level, that was the recent swing high. Yeah. So if we need to get a breakout of that, that could be today, tomorrow, in the coming days. Because look at the scenarios. US markets have done crazy well. RBI's new rule, which is going to be very good for the banks. So banks can give a breakout. ADRs are also positive. US inflation is also good. And most importantly, FIIS last 3 days were buyers. So if today also they turned out to be buyer, and if they buy for 3,000 crore, that itself is enough to give you a breakout. Yesterday, we did not get a bigger fall because FIIs were buyers, right? So DIIs and FIIs both were buyers. DIIs bought for 1850 crore, 1,850. FIIs bought for 3,600 crore. Now, if you look at derivatives, new put open interest is around 16.5, call open interest is around 11. Put is more, that means support. In fact, the PCR is 1.22, which is very good bullish positioning. And participant positioning also, if you see, still FIAs are 16.5% net bearish if you add all the position. Clients 14.5% bullish, prop traders 3.5% bullish. So overall, if you see, clients remain bullish, prop traders are mildly bullish, and FIAs are still short, okay, bearish in the stance. So that's what I want to discuss. Let's see what is going to happen. Immediate resistance will be around 24,500 to 24,530 level. There can be a reversal, but today's market is like buy on dip. If there is a breakout which you are going to get, I think it will be better to trade for breakouts, or it is better to buy on retest and the dips. So rather than trying to sell today. So that is my suggestion. So see you after the market. Thank you so much. And if you would like to join us for the live trading mentorship program, we have the live trading session where I trade and I teach based on my trades. Get in touch with my team, join the sessions. I see you.